rather when you get into prioritizing your risks, don't get bogged down in this risk will cost me 10 million, this risk will cost me 8.5 million. Think about it as relative. So this risk is bigger than that risk. That's all you need to know. You don't need to know the actual nuts and bolts of it. Just this is the biggest risk I have. This one's slightly smaller. I'll deal with a bigger one. You can make that decision in 3 or 4 or 5 minutes, as opposed to spending a week trying to work out the spreadsheet that says this risk is worth 10 million or will impact me by 10 million. And at some point it becomes slightly irrelevant. If it's 8.5 or 10 million, it's still a risk. So go with the big ones, and your experience and gut feel, and a little bit of research will tell you which is the biggest one, and go with that one first.
Hello, ladies and gentlemen, and welcome to our interview with Jim Stevenson. Jim is the founder and CEO at Bletchley Group, a renowned international growth consultancy with 23 years of expertise in strategy, transformation, and growth. Jim, welcome to our Risk Management Show podcast today.
Nice to be here, Boris. I'm looking forward to our conversation.
Absolutely. It's my pleasure. So I believe that we will have a very thoughtful conversation on the topic of strategic risk management for business leaders, your specialty, and navigating uncertainty to secure growth. But before that, Jim, could you tell us a short story about yourself, your career path, and what brought you to where you are right now, and what you guys at Bletchley Group are up to these days?
Sure. My career path is long and winding, so I'll give you the quick version of it. I started out in Scotland, given my accent, in construction, which was a very good commercial background, risk management, finance management, all of those things. How do you do all of those things? So that was a fantastic grounding for my career. But my career's gone through construction into writing code, into writing front end code, into marketing. I was a global digital director for Bacardi for a while, to working with News Corp, launching The Guardian in America, working with a retailer called Marks and Spencer's in the UK, working with a couple of companies in Switzerland. And essentially, I created Bletchley Group after Bletchley Park in the UK with the intent that technology is fantastic, but it needs a business purpose to be meaningful. And that was why I created the company. But since then, we've moved on and we do much more business focused, strategic advisory, transformation work, a bit of fundraising and lots of M&A at the moment, to be honest. So we cover lots of ground. And of course, risk is a huge part of all of that. Either risk mitigation, risk understanding, whatever it is, you need to understand the risks before you enter into those things.
Mhm. So let's continue with understanding the risk in business, because how do you define strategic risk management? Because we have a lot of silos, operational, credit, operational, and market risk. And how is it crucial for business leaders in today's volatile environment?
I view risk slightly different to I'm sure lots of your audience who are professionals at this. I'm not a professional at risk. Risk is part of what I do. So I take a very simplistic layman's point of view on risk. And for me, risk is something that is going to impact on your success or impact on your path to success. So when I get into understanding how risk affects a business, I very much, well, before we get into that, I think risk is very much misunderstood. I think lots of people in the world like to be positive, and we hear constantly be positive, think positively, act positively, manifest your future, and all those types of words, which are great, but they are a hope. And you need to have a practical plan to get you there, and risk needs to be part of that practical plan. So if I can quote Sherlock Holmes to you, the fabled crime detective in the UK. He used to say, when you have eliminated the impossible, whatever remains, however improbable, must be the truth. I changed that. So I have a business version of that. When you eliminate the blockers to your success, whatever remains must be successful. And the only way for you to eliminate the blockers to your success is to understand what those blockers are, understand the risks to your business, understand the issues that your business will face as you move forward into whatever strategic direction you're moving.
Okay, fantastic. Great introduction. So let's understand how do we balance growth and risk? Because all our businesses, leaders need to strike a right balance between taking strategic risks for growth and ensuring business stability. What is your opinion on this?
Yeah, there has to be a balance, but I think the balance can be easily kind of explained once you understand the world that you're living in and the risks that your business face. So I'm sure you've heard of the American military term VUCA, so volatile, uncertain, complex, ambiguous. It's a term that very easily and aptly describes the world that we live in today. The world is getting more volatile. There's more uncertainty. There's more complexity, and it's very much more ambiguous. So, when you put that hat on and you think about those terms, you can start to understand how the entire world is a risk to your business. And it doesn't have to be a critical risk or a deathly blow, but it's impacting everything that you do. The butterfly flapping its wings in Thailand changes life in the US or the UK or wherever you are in the world. So I always put that kind of cap on. And then what I personally do is I do an awful lot of research on global politics and global economics because that's the international world. But even if you're working nationally, supply chains affected, talent management's affected, your customers are affected. So you need to understand those things in order to be able to understand the risks that your business face. And with that wide context, it then becomes easier to go into a scenario planning phase whereby you're actually looking at what you're trying to achieve and what are the potential blockers to you achieving it, whether it be a risk or a real blocker or not. And then my personal process is I prioritize those. I don't see the point of removing a blocker that's a minor irritant to your business when you have ones that are potentially going to completely derail your business. I always start with the highest priority because let's be honest, if you can't resolve that issue, then there is no point fixing all the smaller issues because you're going to hit the big one anyway. So I go through a process whereby I prioritize those risks with the impact to the business in mind. And then you start at the top. You manage that risk, whether that management is going through the risk, mitigating the risk to go around it, completely negating it and changing your strategy and going from for example, rather than expanding into Germany, you change and expand into Italy. There's things that you can do to change those risks, but start with the biggest priority one, the one that will have the biggest impact in your business, and then start your process of managing those risks and working around those risks.
Fantastic. So, can you share some real world examples, maybe without dropping the names, that you kind of successfully navigated a kind of major crisis through effective risk management strategies?
Oh wow, I'm not really sure I can. There is one that comes to mind. It's not classic in any manner of means, but I was working with a company that wanted to, the leadership team wanted to find a new investor. So essentially what they wanted to do was sell their company to a new investor for them, private equity firm predominantly. But their challenge was that their payment as individuals, as the leaders of the company, was based on a certain valuation within the business. And without getting that valuation, there was no point in them selling at this point. But they really wanted a new owner. Their previous owner was great and got them to their certain level of business and certain expansion and growth. But they'd come to the maximum part that that private equity firm could help them with. So they wanted a new investor to help them grow further and expand internationally and do things like that. But without reaching this valuation number, they just couldn't justify the transfer of ownership. So what we did was we actually went away and came up with a plan whereby we would find the company two smaller acquisitions to make. Once it had made those acquisitions, that company's value had gone above the threshold that they needed, and a new private equity company could come in. I call that creative deal making, and it was a deal making risk that we had. But I like that level of creativity. I think far too many people, when they look at a problem or a risk to their business, they get single-minded in where they're going, and they either forget the objective they're trying to achieve, or they forget the nature of the problem, or they just don't understand the nature of the problem they're facing. And it limits your options. And I like that creativity in the process, whereby you go back to the core basics of what is the problem? Well, genuinely, what's the problem? And what is it we're trying to achieve? And then you've got freedom to innovate around about how you mitigate those risks, mitigate those challenges and blockers to your success.
Oh, fantastic. So there's this kind of almost art of the deal as the famous writer, right?
Yeah, no, completely. It's funny because lots of people think that what we do, risk management, business growth, is all about Excel spreadsheets and growing your business. And a lot of it is, but I think the true art of it is an art. It's an art form. It's a creativity that you don't see very often. I've not yet seen an annual award for the most creative risk manager. You just don't get those titles and those awards. And yet, if you're doing it well, creativity is a huge part in coming up with the right solution to those challenges that you face.
Yes, yes. I sometimes I went to these risk conferences and there are some awards, but mostly kind of a risk award of the software of the year or something specific niche software awards, maybe some risk management award, but it's kind of well,
Yeah,
I don't know what to.
but where's the award for the most creative solution, the
Yeah.
resolution to a risk? I'd love that. I think that's much more fun, and it's much more useful to your business.
Let's discuss about future-proofing business strategies, because uncertainty being a constant. How should business leaders evolve their strategies, including risk management strategies, to stay ahead of emerging threats? What is your opinion on
Wow. I mean, do you have a week to talk about this topic? We could be here for
that?
weeks.
No, maybe just
Um,
layman
well,
terms.
yeah, we'll give you a quick summary. I mean, there are so many risks to the world at the moment. Going back to my comment about VUCA, the volatility, uncertainty, complexity, and ambiguity of the world. There are so many risks at the moment, and we can mitigate a lot of them, but there's a significant number that we cannot mitigate. We just can't. I can't influence the war in Ukraine, what's happening in Israel and Gaza. I can't impact on how many microchips China is going to be making to compete with DeepSeek and OpenAI. So there's a bunch of things out there that will fundamentally impact our future that most business leaders cannot control. And for those issues, so I would categorize the risks into two: ones that I can control, ones that I can't. The ones that I can control, we've spoken about. The ones that I can't, it's all about being flexible. It's about having a direction of travel. It's knowing where you're going to get to, but without being too prescriptive on the road to that destination. And I think if you're flexible in how you get to your destination, your objective, then life becomes easier. You're much more willing to roll with the punches. I think it was Mike Tyson said, "Everyone has a plan until you're punched in the face." I think most business leaders these days should expect to get punched in the face at least once a week. And once you accept that that's your world, then you can start planning around about it. And for me, the key to being successful in that flexible world, it's less about your processes and your strategies and everything else. It becomes much more about your culture and how you've organized your company structure. So having small, flexible teams that have been given very clear objectives to achieve, and they've been given the environment and the capabilities to achieve them, those small teams will be much more flexible in this ambiguous, complex, uncertain, volatile world. And if you put enough of those teams together, you have a big business. You have a small business, you have a big business, you have a huge business. So it's how you structure your organization, and then it's the culture that you put into that organization that gives you the flexibility to accept being punched in the face every week, and roll with those punches and make it successful for you. So it's that flexibility that you need to build into your organization, but into the DNA of the organization.
Fantastic. So, Jim, I would like to ask you a personal point of view. What
Sure.
are the major misconceptions in this field of consultancy and navigating a secure growth space that you kind of strongly disagree with?
Oh wow, I've not thought about an answer to that one. What's the big? I think there's far too many. I mean, there is no one answer to that. I think the world is becoming much more um, s splintered in its views. At the moment, we have a trend that is taking back, reversing back DEI, which I fundamentally disagree with. So that could be an easy answer for it. And just for your listeners, I fundamentally disagree with rolling back DEI because I do not know any company in the world um, that not understanding your customers, the communities you operate in, or your employees better has not helped you be more successful. So I think it gets a bad label, and that's why it's being rolled back. But DEI for me is a big one. But that's only some companies, it's not all of the companies. I think other companies rely far too heavily on process. I much prefer culture and giving people the flexibility to do it. But that's not to say you don't need process. If you're going to optimize, improve, iterate something, it's difficult to do any of those things with culture, but you can do it very easily with a process. So don't focus too much on one thing. Have a balance, have the right culture, have processes that are appropriate to allow you to change, optimize, and improve. Remember that you operate in a wider world, whether that's your local community or the world in itself. And understanding your customers, the communities that you're operating in, and your employees better is a help to you. I can't think of anything else, to be honest.
Yeah, that's quite
Yeah.
sufficient. Good. So, if we, Jim, if we summarize this interview for somehow for our listeners that would like to walk away with one or two major takeaways, what would that be?
Oh, one or two takeaways is understand the world that you operate in. Understand that it is whether you think it is or not, it is absolutely volatile. It's uncertain. There's complexities, whether that's in your customer base, your supply chain, or just having an international presence. Look at your risks as and prioritize them as what's going to kill you first, what's going to kill your business first, and then deal with those ones. But remember to prioritize risk and reward. There's no point dealing with the risk if there is no reward for it. And then the last one that I've not spoken about so far is I do like to move quickly. And in moving quickly, I find that treating things relative is a really good way of thinking of them. So rather when you get into prioritizing your risks, don't get bogged down in this risk will cost me 10 million, this risk will cost me 8.5 million. Think about it as relative. So this risk is bigger than that risk. That's all you need to know. You don't need to know the actual nuts and bolts of it. Just this is the biggest risk I have. This one's slightly smaller. I'll deal with a bigger one. You can make that decision in 3 or 4 or 5 minutes, as opposed to spending a week trying to work out the spreadsheet that says this risk is worth 10 million or will impact me by 10 million. And at some point it becomes slightly irrelevant. If it's 8.5 or 10 million, it's still a risk. So go with the big ones, and your experience and gut feel, and a little bit of research will tell you which is the biggest one, and go with that one first.
So, whatever don't kill you, make you stronger, right?
Whatever doesn't kill you makes you stronger. Absolutely. I like that.
All right. So, Jim, fantastic. That's well all my questions. If I forgot to ask you something that you feel important for our audience, please go ahead.
Just to remember to quote Sherlock Holmes. You can't go wrong
Absolutely.
quoting Sherlock Holmes.
Absolutely. So, thank you again, James, and wish you great success to you and your company, Bletchley Group, and hope we will communicate in the future. And you're welcome to join our community at globalriskcommunity.com.
Awesome. I would love that. Thank you so much for the conversation and having me on the show. Thanks, Boris.
Absolutely. Bye bye.